Right, so joining us on the panel, we have Mr. Tom Powell. Tom is the CEO of AFSIC Capital, and he founded AFSIC Capital to make sustainable investments in the agricultural space. He has over 20 years of commodity trading and fund management experience, gained in investment banks and hedge funds. And Tom is based in Jersey and has investment director roles in commodity trade finance, where he manages a $200 million portfolio. He chairs the Jersey Funds Association ESG committee and is a driver of ESG principles to achieve the UN Sustainable Development Goals. So I'll call on Tom to briefly tell us more on what the capital does and his areas of interest and the relationship with Rwanda.
Just checking that's on there. Thank you. I think you probably skip forward 2 slides. One of them is a disclaimer, which I will circulate afterwards. But basically, the four-legged ambassador is what took me to Rwanda. And from Jersey, we have a very strong relationship with Rwanda, which has been founded since 2004. It originally started when His Excellency Paul Kagame came to visit the island, and it led to an introduction to the herd and the exploration of an opportunity to send the genetics of our cattle to Rwanda to see how it would adapt and evolve. And so in 2004, we sent 300,000 straws of bull semen to start crossbreeding the Ankole and the Jersey. And today we have sponsored a tagging process of 1.2 million cattle in Rwanda. Now, cattle at the bottom end of the pyramid is very interesting in that they deliver vital animal proteins for human consumption. They provide rural employment. They provide a natural source of fertilizer for smallholder farmers, and have been proven as a huge driver of bottom-up wealth creation. So where I sit is working alongside the Royal Jersey Agricultural Horticultural Society and the World Jersey Cattle Bureau. On the next slide, I think there is a sort of set of where I position. And so the philanthropy started by us gifting the semen to Rwanda, and then that was supported by Jersey Overseas Aid. And working with the likes of Jersey Finance, who are represented here by Elliot in the corner there, and various of the island's investors, created a fund to add to the value creation. So milk processing, cheese, butters, ghees, yogurts, processed milk for providing a quality source of protein to urban environments. And that today is looking at all of these sectors, doing some very high-level investments with both the government agencies, the larger brands of dairy in country, but also very small, almost VC-level structures where there are growth stories in yogurt production. There are opportunities in a semen collection station where we are developing a Rwandan Jersey for Africa. And going back to the words of my esteemed colleagues up here, Rwanda is a spectacularly well-placed country for becoming the hub for generating interconnected agricultural processes between the nations of Africa, and talking about the access to 500 million consumers, talking about the ease of doing green business, which Philip mentioned, and that ability to connect, the fact that there are dual taxation agreements, that there is cross-flow trade with the DRC, your neighbours, that is fantastic. And with Jersey, we have a DTA in place. So to facilitate that investment has been relatively straightforward on the structuring side. And there is experienced lawyers and service providers from Jersey who have worked very closely in establishing the financial centre in Kigali. So there are these fantastic links, and every step of the way that word connectivity, which has been referred to by everybody so far, has been brilliant. And the ability to get to the minister, to the deal makers on the ground, to the people that run the dairies, the Crystal Ventures, all of these fantastic enterprises, has been a very welcoming and encouraging environment to be the hub for an expansion of dairying across Africa to feed a burgeoning population. And the Jersey cow is a great source of human consumable animal proteins and a great first step to be leading that from Rwanda. So conscious of time, I'll pass over to the next person there.
Thank you very much, Tom. So we're conscious of time, so we'll introduce each speaker and just ask an opening question, and then we'll take some from the floor, if any. So I will also introduce Mr. Ashish Patel. Ashish is the managing partner, ESG First Fund, Aviskar Capital. Ashish has been involved with growth companies for over 20 years and has strategic, operational, and investment experience. Before joining Aviskar Capital to lead Africa, he was the managing director for Sub-Saharan Africa at Abraj, based in Nairobi. So I do have a question, an opening question, and we'll obviously invite yourself to tell us a bit about what you do. But from everything that we've heard and from your vast knowledge and experience, I thought to ask right away what role you think the Africa Continental Free Trade Area will play in catalyzing investment in Africa, and from your experience, with Europe, the European market, the Asian market, and now Africa, how could you put this into context?
Thank you very much. Just a very quick background on myself. As Emmanuel mentioned, I'm based in Nairobi. We run a fund focused primarily on export-oriented businesses. Simply because, when we were setting this up, we felt that there was a significant opportunity in Africa around businesses that are supplying, frankly, world commodities to the rest of the world, but we didn't feel that there was sufficient amounts of value addition that was being done on the continent. We then there are many problems that we're still trying to solve for. We haven't solved everything. But one of the big areas that we felt that required a lot of support was on the financing side, right? Because simply, it's interesting to note that financiers or exporters out of Africa into Europe have no financing facilities. As much as we talk about export credits, etc., that's not really quite available. That was the fundamental reason we set this fund up, and we found that the demand for such opportunities is really quite high. Secondly, we're seeing that Africa slowly but surely is moving up the value chain. I'm really happy to see where Rwanda is today in terms of its push for agricultural exports, but other non-tangible exports such as BPO services, which many countries in Asia actually started its original export orientation from. India is one, Singapore is another, which then morphed into a variety of other exports that are coming out. What we are looking for, and again, Rwanda is setting pretty decent and high standards around this, is economies around knowledge-based exports as opposed to just simply commodity-based exports. Commodity-based exports, whilst great, you find that the value addition or the value, the portion of the value chain is retained primarily at the importing level as opposed to at the exporting level. Sorry for the lack of fancy words here, but it's just trying to make sure everybody understands that. And we're finding that the usage of capital to address value addition at the source, meaning in Africa, and helping those businesses with key requirements for exports, particularly around environmental and social governance, is becoming more and more important. And therefore, a lot of my fund, which is called, ideally it's called the ESG First Fund, is focused around helping businesses that are exporting, doing value addition, but also helping them enhance environmental and social governance to help with those.
Thank you very much. And next we'll hear from Eula Brople, who is the founder and managing director of Vested World, an investment fund manager that focuses on early stage companies in sub-Saharan Africa. As an angel investor, Eula has helped fund several early stage businesses in sub-Saharan Africa, developing an acute understanding of the challenges and opportunities associated with early stage investing in emerging markets. And from what I gather, he has also a legal background, as well as, of course, an entrepreneurial background. So, Eula, please tell us a bit more about your work, and perhaps to put it in color, I can lead with a question from your own experience. What would you say is the greatest challenge for early stage investment in developing countries, and how would you say, from what we've heard today and what you know, how does Rwanda measure up?
Well, thank you, and glad to be on the panel with each of you. So Vested World, we are an early stage fund manager. We have invested in 5 companies that have operations in Rwanda, including Get It, with the founder, which is here, Lauren Nikaranga. And we focus on investing in businesses that, one, have the potential to scale, but are also addressing fundamental problems in the countries, as Tom and Ashish have mentioned. Agriculture, consumer products and services, and technology. How can you build capacity within both agriculture and manufacturing? How can you provide products that have previously been imported but could easily be made in these countries? How can you make them in the countries where the companies are operating? And how can you leverage technology to make things more efficient and scale a lot faster? One of the things we enjoy about investing in Rwanda is what has been mentioned already, the ease of doing business and the ability to set things up faster. And I think the International Finance Center is going to even aid that further by allowing funds and businesses to use Rwanda as a base for expansion into other markets. One of our portfolio companies, Victory Farms, has expanded from Kenya into Rwanda and is doing aquaculture in Lake Kivu. And another, Kasha, expanded from Rwanda into Kenya, and we're the first company in Rwanda to receive an online pharmaceutical license. And so it goes to show the country is a good place to do business, and entrepreneurs are gravitating towards it. One of the challenges many early stage companies face is access to capital. While funds like ours can invest at a relatively early stage, the biggest challenge continues to be getting more investors to crowd into those companies to allow them to continue to execute and scale whatever they're building. And I would say that's the biggest obstacle to growth right now. And it's improving as more funds come into the market. I remember when I first started investing on the continent, slightly over $100 million was invested in early stage companies. Today, that number is closer to 4.5 billion by some accounts, should exceed 5 billion this year. And so that's all trending positively, but when you look at that within the global framework, it's a fraction of the capital that's going to early stage companies in other parts of the world. And so in order for the continent and countries like Rwanda to really continue to advance, and as we all know, small and medium-sized businesses are the primary drivers of employment and economic growth. For those companies to be able to scale, they're going to need more capital. So, yeah.
Thank you very much. Very conscious of time. We have just under 10 minutes, so I wish to open up the floor for questions for each of the speakers. So if you have a question, please raise your hand, and there'll be a microphone making its way to you. Any questions? Oh, yes, we have one.
Hi, good morning.
Good morning.
And thank you all for a really good hour. My name's Colin. I work with a company called Ox. and also serve actually as chairperson of Ox Rwanda Limited, which has been in operation in Rwanda for the last 18 months. 2D, hi. I guess just a comment that may lead into a question. Number one, I fully endorse everything that has been said here. We set up a company in 2 hours. We open up a bank account in an afternoon, less than 3 days. And now, in the last 18 months, we've grown Ox Rwanda from just me to 60 employees, all Rwandese, about $500,000 worth of annual run rate revenue. I've pitched to Euler, did not succeed. I've moved animal feed for your cows, Tom. And I'm looking forward to engaging more with KIFC. Thank you, just endorsing basically.
If I may, Colin, we have new investors in town, so maybe you can share your new pitch.
Good morning, everyone. My name is Arnaud Gina. I'm the founder of Impact. We're a specialized company expert in the setup and management of impact finance funds. I'm really glad to see all these funds on stage. So we're based in Luxembourg. We have 50 people in Luxembourg, 2 persons in Mauritius. And our aim is really to see all these international fashion centers being set up. Just also, as you just mentioned, we also just recently supported the creation of an impact fund based in Rwanda, also together with Tudi, that actually invests into education. So just to say that indeed there are projects, it's not just a nice presentation, projects are being created as we speak. Question to the financial center, transparency on ESG and impact aspects is really the most important topic of the day, especially in Europe. In Europe, there is a new regulation around sustainable finance. It's called the Emerged Finance Disclosure Regulation, which is pushing the whole market to not only saying that they aren't doing good, but really proving it by reporting on it and then committing to targets, etc. How do you see this coming also in around that? Because I think it's a key element that would also potentially make the difference compared to other international financial centers.
I believe this question is for me. So thank you, Arnaud. Before answering to the question, I think the audience should know more about the fund that you have supported in Rwanda. The name is Future of Work Fund. It is a fund investing in students coming from low-income family. And basically how the fund is special is the fact that there is no collateral being asked for those students to be supported. And it is an income sharing mechanism put in place where the students will be paying back after starting working. Again, looking at the cross-border, I will say, enabling environment of Rwanda, the fund is investing today in students in Rwanda, in South Africa, and in Kenya. And thanks for the support of Impact from Luxembourg, they have been able to leverage on the new legal framework of Rwanda to do it. So I think it was important to say it, especially knowing who is behind the fund. So who has invested in that fund? First, we have US DFC. So the largest DFI in the US invested in that fund domiciled in Rwanda. Second, we have, for those in Europe, we have UBS Foundation who invested in the fund. And third, we have family offices from Germany, from Switzerland, who also are part of it, together with some African investors. So I think it was important to, again, thank you, Arnaud, for making it happen, and to appreciate the fact that Rwanda is also supporting the neighboring countries. To make my answer very short to you, we will be in the coming days announcing Rwanda Sustainable Finance Strategic Roadmap. And in that roadmap, the monitoring, the transparency around ESG is mentioned, and we do hope with our partnership with Luxembourg that maybe you or other institution in Luxembourg will be supporting the development of this roadmap. Thank you.
Thank you, gentlemen. Thank you all very much for your contributions, and thank you all for paying attention and for your questions. We are out of time, as suggested by the bell. So I will just conclude with maybe some takeaways for this session from our High Commissioner. He highlighted that Rwanda has worked tirelessly and daily to ensure that Rwanda is an investment-friendly country and as friendly as possible. And it is second, in the continent for ease of doing business. It is a one-stop shop for investment, as mentioned by Philip. It's also a proof of concept country, and you're most welcome to visit as well as to invest. And I just wish to ask you to please join me to thank again our speakers, the High Commissioner, His Excellency Johnson Busingye, Philip, and Tudi, Tom, Ashish, and Eula. Thank you.